The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Happy Tuesday. Welcome back to the Financial Exchange on the last day of the second quarter, where we've seen AI stocks just rip for the entire second quarter, and some volatility in there, but pretty incredible numbers that were put up. This morning, 6 minutes ago, we received the job openings and labor turnover survey. We'll get into that in the last segment, but the headline numbers here, the total job openings came in at 7.6 million in the month of May, which is pretty much unchanged from the previous month, but they were actually expected to decline, and they really didn't. It was pretty much unchanged. The rate of job openings, likewise, unchanged for the month. So we continue to show signs that seem to be stalling out, maybe in terms of the pace of increases, but we're stalling out at a really good level of employment is the key message here. And while we might not be seeing the trends on new employment like we were 3 years ago, we don't need to be seeing those trends on new employment because, quite frankly, there aren't just enough available bodies to fill those jobs. And so I expect when we get to the unemployment report on Thursday of this week, the monthly jobs report, which will be covering the month of June, this survey covered the end of May, I suspect we are going to see an unemployment rate that stays where it is or even declines, and continued big gains on unemployment. So we will, again, revisit the JOLTS report throughout the course of the show, just released 7 minutes ago, and the key takeaway is slightly better than expected and really unchanged from the prior month here. We had a solid day in markets yesterday, a rebound from the sell-off of last week, all around markets, but particularly focused on the NASDAQ. This morning, we've got all three major indices in the green to start the show, at least. The Dow Jones Industrial Average barely up after they hit their all-time record yesterday on the Dow. Basically flat now for the day. S&P 500 up 1/3%, and the NASDAQ up 0.75%. There's going to be a Dow component change going in, wasn't there?
Google's
getting entered for Verizon.
That's correct.
Yeah. Okay. Yep. So Alphabet, the Google parent company, will be swapped out in the meaningless Dow.
For the 5 people who still follow what's in the Dow.
Not true. I do genuinely believe, like, when people come and tell me what the market's doing, they always tell me what the Dow is doing, even though I find it irrelevant.
Absolutely. They love to quote the Dow is over 50,000,
Yep.
but I like to say it's like Fenway Park's manual scoreboard. It's just like a artifact of yesteryear that is really not necessary, but is nice to look at, I guess.
We are also heading for the best quarter ever for semiconductor stocks. No big surprise here, but honestly, maybe it is. The Philadelphia Stock Exchange Semiconductor Index has bumped up 81% in the second quarter as of yesterday. We will see where it ends today, but that would be the best quarter ever in history since this thing has existed. It's up 94% in 2026, and you have several names in here that are, beneficiaries of this AI boom that are up substantially more. Micron Technology jumped 300% in 6 months, moving their market cap over $1 trillion. SanDisk saw a 764% gain during this period of time. Intel jumping 257%. Seagate up there as well. And so you have these companies that are, in terms of stock price, just skyrocketing forward, but justified in some ways due to the AI spending craze and the deals that are being locked in here for the semiconductor, memory, and everything else manufacturers.
Yeah, I mean, what you're seeing from these companies is, though, when you look at the Philadelphia Semiconductor Index and its performance, you haven't seen this strong of a year since 1999. And I think people often shudder when they hear the comparisons to 99. But we always say this, this time is different, but this time it is different in the sense that these companies are earning significantly more money. I mean, if you look at Micron, for example, we covered their earnings report last week where they saw a quadrupling of revenue year over year. You've just seen all these dynamics in a market where the profit margins for anyone within the semiconductor space, particularly now it's trickling down from the Magnificent Seven to some of these other component providers that are probably not as household names, but the margins that they're commanding, the earnings that they're generating are really significant. To me, what's most fascinating heading into the second half of 2026, and probably the biggest story heading into 2027, is can this momentum continue? You have a consolidation of significant spend from these hyperscalers, and we are on this kind of high wire act, Mike, where we want to continue to see the enthusiasm regarding AI from a market perspective, because that is what's driving all this earnings growth. But it's sort of fickle. And that's what we've seen from the semiconductor index trading, as well as the NASDAQ over the last week or two. Any dent to that sentiment really has a tremendous impact on what you're looking at from the forward earnings growth of the S&P, which the tech sector is responsible for a lot of that.
Well, frankly, the market is just outrageously expensive. The semiconductor index is trading at roughly 26 times estimated future earnings. That's well above the 10-year average of 19, and not far. It hit a record of 30 back in 2024 because, frankly, these earnings hadn't really been realized by these companies yet, and so it was trading quite a bit higher. Now you've realized some of those earnings, the multiple is coming down a little bit, but still quite elevated. And that remains the case for the entire market as a whole, is that multiples, when you look at valuations, are stretched no matter which way you cut it. And yeah, Paul, I mean, I think the question to me is that sentiment shift. And I don't think it's sentiment around, hey, is the semiconductor group of companies going to continue to sell chips? That's not the sentiment that changes. If it comes from somewhere, I think it comes from business users of the technology as they continue to see their costs skyrocket. Is there a sentiment shift among executives to say, you know what, this just isn't worth what we thought it was? And I don't see any sign of that whatsoever. But as the reason that these companies have become so highly valued and are generating the most profit they have ever seen is because the message from executives across the tech and even non-technology space, right? Law firms, healthcare firms that are telling their employees to use as much AI as possible to do your job. And I don't see much of an indication that that directive is slowing down or changing in any meaningful way. We're going to cover a story in the second hour of the show that talks about just that, where you are seeing those signs, but they are few and far between. And until you see that cost discipline come into frankly, into investor demand. It's not going to come from the executives themselves. It's going to come from investors who say, whoa, hold on. You're spending how much on capital expenditures this year? You're bringing your profit margin down to what? You're bringing your free cash flow down to here. You're cutting the dividend because you can't afford to pay it anymore because you're spending so much on this. Let's take a closer look at all of that, and that's when you start to find the winners and losers. Once cost discipline comes into play, that's when you find out who can actually build this stuff efficiently, who can use it efficiently and get a good ROI. Because one thing that I'm personally convinced of is not all of the companies doing this spend right now are getting a good ROI and are any good whatsoever at building this stuff efficiently.
Right, and the timing on that ROI is going to be difficult from a market perspective, where the market's going to want to see it early and often. And what can happen in these cycles is it's not a perfect linear trajectory of growth in terms of the return on all this big spend. Maybe you get it, but if it's prolonged at all, I mean, these chip makers, the earnings expectations for 2027 is 49% growth. That's up 35% from where it was in April. So the market is pricing in tremendous amount of earnings growth, and any dent to that can have a quick impact on the way that investors will recalibrate valuations in the market.
But to be clear, I mean, the first AI model did not get released until November 2022.
Mm-hmm.
Nobody was using this technology until 3 years ago. And so I don't know how long. I mean, when did we all start using the internet? 92, 93? 95?
No,
Probably
95.
95 and
Early
really got
adopters,
going.
93. I mean, it took 8 years for it to pop. I have no idea when this is going to become a problem, but that's just the easiest comparison to make. But I really do believe there's only one way this can go, which is a new technology comes out, it gets overinvested in. Some of the companies turn out to be pretty bad at it, and you'll have the cycle turn around at some point. But we don't know when that's going to happen, and I don't see a lot of indications that it's about to happen now. Quick break. When we return, we're going to take a look at that job openings, that JOLTS report from this morning at 10 a.m. Quick break. We'll be right back.
The Financial Exchange streams every day live on YouTube. Subscribe to our page and follow the markets all morning long. Only here on the Financial Exchange Radio Network. Estate planning isn't just about writing a will. The right trust can help your family avoid probate, protect your home, reduce estate taxes, and even help shield assets from the cost of long-term care. That's why Cushing & Dolan created a new guide called Demystifying the Top 8 Estate Planning Trusts. Inside, you'll learn the difference between revocable and irrevocable trusts, why some trusts are designed to protect assets from a nursing home, and how certain trusts can keep your family's affairs private. The guide also explains some of the biggest mistakes families make, including creating trusts but never properly funding them. If you've been putting off estate planning, this guide is a great place to start. Call Cushing & Dolan today at 866-848-5699 to get your free copy. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One missed retirement deadline could cost you thousands of dollars. Our new guide, Understanding RMDs, breaks down the rules for required minimum distributions, including when you have to take them and what can happen if you get it wrong. This isn't just about taking money out of an account. Your RMDs may affect your tax bracket, the taxation of your Social Security, and even whether you pay higher Medicare premiums. This guide also covers common mistakes people make, like forgetting about old retirement accounts and mishandling inherited IRAs. If you have money in a retirement account, this is information you need to know. Call us right now at 800-393-4001 to get your free copy of Understanding RMDs. That's 800-393-4001, or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Remember, you can watch the show live every day on our YouTube page. We'll have breaking business news, and all of our content is also archived. So if you want to go back and see a particular discussion, it's all there with the click of a button. Just search the Financial Exchange on YouTube and be sure to hit that subscribe button.
So again, this morning at 10 a.m., we got this week's first jobs report from the BLS, which was the Job Openings Labor Turnover Survey. So we cover this one every month, but just a refresher course on this guy. It measures things from the end of the month of the previous month. So we're looking now at data from the month of May on the labor market. And rather than telling you the unemployment rate, it's really giving you a survey of businesses to try and find out how many job postings did you open up, how many people did you hire, how many did you fire, how many people quit during the previous month. And to that end, it's referred to as the churn survey. If you're trying to determine how much looseness or tightness is in the labor market, this is the survey you want to look at. And a lot of economists looked at this one in particular back in 2021 as a good predictor of the inflation that we were going to get in 2022. It indicated that, at its peak, there were 2 jobs open for every unemployed person looking for work, and lo and behold, wages went up, inflation went up. We are nowhere near that anymore. We still do have basically a equal measure of the unemployed to those job openings. But what was a bit surprising, I think, to most was the reversal we saw in the labor market this year. So it was running pretty weak last year. We saw a total pace of job creation that averaged fewer than 10,000 jobs a month. This year, we've been on the pace of over 100,000 jobs created, and those job openings have continued to tick up. They saw a big surge back in April, and they haven't really dipped down. So the total job listings are still sitting at 7.6 million. It was a bit surprising that it didn't come back down in the month of May. But everything else was pretty consistent, right? The rate of hires didn't change much. The quits rate didn't really change at all. And there was, importantly, no significant uptick in layoffs and discharges. I know a lot of folks have been focused on that one area. I was meeting with somebody and their son who works in the tech sector out in California yesterday. And it's like, are you seeing that? And he is seeing a lot of people in his industry not finding work. But we haven't seen that permeate through the whole labor market and show up in the data in any significant way here. Interestingly, the one big area from a sector perspective where you saw a notable bump in terms of the job openings was in the wholesale trade area. And, wholesale trade can include a lot of different things. You can think of this as like wholesale sales representatives or account managers, logistics and supply chain managers, even down to like forklift operators at warehouses. The one thing that stood out to me is if we are actually seeing a big bump in data center construction and management, then you would expect this area to increase in volume, right? You need all the supplies that go into it. You've got all sorts of manufacturer reps and all those things that fall into that group who are suddenly maybe in high demand due to the construction boom that we're talking about right now.
Yeah, it's amazing the resiliency that you've seen in the labor market in general. It feels like now for the past 2 years, sort of heading into the beginning of the calendar year from both in 26 and 25, that the labor market was a concern that loomed over the economy. But again, we've continued to see, whether it's because of the shortage on the supply side, that there continues to be demand, even though amidst some of these headlines that you often get yourself caught up into reading about the tech sector or AI coming for jobs. From a data perspective, we just really haven't seen it yet, to your point. And one area that you would think would be strong, like you mentioned, is on the data center side, the wholesale trade. Healthcare has also been an area that has been really robust over the course of the last year or so when it comes to
nurses and healthcare aides all across the board. Social assistants and healthcare, a big area of hiring. As we head into Thursday's jobs report, expectations are for 118,000 jobs to be created for the month of June, I do believe. The last 5 months, we've averaged 114,000. Am I off on that, Tucker? In terms of expectations?
For the month of June?
Yeah, the jobs report that we're going to get on Thursday is for the month of June.
Yeah.
107 to 123. I'm reading here.
So right in that range in terms of expectations. The unemployment rate expected to hold steady at 4.3%. Though what I will say is most economists look at the pace of job creation that we've seen, 114,000 again for the first 5 months of the year, and say, you know what, pretty tough to see that continue with the unemployment rate staying at 4.3%. Yeah, we're basically assuming that this pace of job creation is above the trend line for stabilizing the labor market. There are not a bunch of immigrants coming into the country right now. There are not a bunch of kids turning 18 right now to replace the retiring baby boomers. And so should this pace continue for the full year, I would expect the unemployment rate to come down, which just increases the pressure on the Fed to do something when it comes to interest rates and moving them upwards.
Clearly, inflation now is the major focus, and that's where the Fed is looking at this point.
Yeah, I mean, look, the inflation rate has not been anywhere near the Fed's 2% target for 5 years in a row now.
Mm-hmm.
That is a long time. And I know we talk about the technicals in this a lot, but the concern for the Fed and the concern for people that watch the Fed is if that inflation becomes so ingrained in the American psyche that we begin to anticipate more inflation, then that begets more inflation.
Self-fulfilling prophecy.
If you get to the point where prices are going to go up another 4% next year, then you ask for a bigger raise. You buy your car and computer and TV earlier than you otherwise would because you're worried about prices going up. And when that happens, the Fed only has one solution to that problem. The solution to that problem is to sink the whole economy into a really bad recession, drive up the unemployment rate, and crush that inflation expectation.
By increasing interest rates.
That's the mechanism.
They were able to do it last time around.
Agreed, but that wasn't a prolonged, ingrained inflation situation, right? Like, we were pretty fresh to that inflation. What I'm talking about is a 1970s-like period where people really expect higher rates of inflation for a longer period of time. There is only one solution to that problem, which is a pretty ugly recession and what everyone's hoping we don't need to get to. Quick break, Wall Street Watch coming up next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. affiliated.
This is Michael Valila, adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One missed retirement deadline could cost you thousands of dollars. Our new guide, Understanding RMDs, breaks down the rules for required minimum distributions, including when you have to take them and what can happen if you get it wrong. This isn't just about taking money out of an account. Your RMDs may affect your tax bracket, the taxation of your Social Security, and even whether you pay higher Medicare premiums. This guide also covers common mistakes people make, like forgetting about old retirement accounts and mishandling inherited IRAs. If you have money in a retirement account, this is information you need to know. Call us right now at 800-393-4001 to get your free copy of Understanding RMDs. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. If there are younger families out there, should they consider having a trust in place, and what type?
Most people don't think about it when you're young, but if you're a young family, meaning you've got minor children, you might not have a ton of assets yet, but you want to make sure that what you do have is protected for your children. You could probably use a revocable trust. I don't think you need an irrevocable trust, but a revocable trust. You put your assets in. Again, they're going to avoid probate. Again, it may or may not be a big estate tax issue at the moment, but whatever you have, your children can't own, right? They are minors. So you don't necessarily want to leave your assets to a guardian and have the guardian deal with everything when you can design a trust to hold the assets and ensure how and when and where and why they get these assets. Just pick the right trustee, put the language you need in the trust to control it for those children, and the trust will accomplish that task. So just because you're young, folks, doesn't mean you shouldn't think about your estate planning. Sometimes it's not all about the money and the probate and the taxes, but more so about the family behind the estate plan.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they have written a brand new guide called Demystifying the Top 7 Estate Planning Trusts. Call right now for your free copy, 866-848-5699. That's 866-848-5699. Or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in positive territory as the first half of 2026 comes to a close. Right now, the Dow is up about 0.25%, S&P 500 up about 0.5%, NASDAQ up 1% higher. Nice little rally there. The Russell 2000 is up about 0.25%. 10-year Treasury yield is up 2 basis points at 4.40%, and oil is flat today at $70 a barrel. Ahead of today's open, the S&P 500 jumped 14% this quarter, its best 3 months since the second quarter of 2020, while the Nasdaq jumped 20% for the quarter and the Dow climbed 13%. Meanwhile, shares in drone maker AeroVironment surging 22% after the company blew past street forecasts for its fiscal fourth quarter. After benefiting from U.S. plans to modernize the military and secure space, the company's CEO said during an earnings call that the company's growth opportunity has never been stronger. Meanwhile, after leaping 13% yesterday, shares in crypto hoarding company Strategy retreating 5% today. The company said it plans to buy back stock and sell Bitcoin, among many moves in a bid to shore up confidence in the company. And after today's closing bell, we'll see earnings from retailer Nike. I'm Tucker Silva, and that is Wall Street Watch.
We talk a lot about how markets have surged so much, especially semiconductor stocks. I think it's important to point out that this has not been a pure play, every company benefits type of market, at least over the course of the last month. The Mag 7, for example, Microsoft, NVIDIA, Alphabet, Google's parent company, Apple, Meta, which is Facebook's parent company, Tesla, and Amazon have actually lost some $2.3 trillion in market capitalization over the last month. I find that to be rather irrelevant given how much they have gained over the last year, but they have lost out over the course of the last 30 days as investors have turned cash to other places, SpaceX, as well as companies that are, in my mind, kind of further down on the AI demand supply chain, right? You've gone from, hey, these are the big builders and users to, hey, what's the big supplier in this overall area? I really consider these companies, by and large, other than NVIDIA, to be the spenders of artificial intelligence. While some of them also do some building, like Microsoft, they are massive spenders in the space rather than the huge chip-producing beneficiaries of the space, and that's not been the big beneficiary this most recent few days.
Yeah, they're the ones with the biggest CapEx budgets that are going out to building out these data centers and spending, like you said, so much on AI, and the bigger focus has become on the juicy profit margins that the Microns and SanDisk are commanding that, like you said, are providers of memory components of the semiconductor stack rather than the chip design, or in this case, just some of these other data center build out pieces. But again, these articles love to use, dollar values. 2.3 trillion sounds like a lot. It is a lot. Don't get me wrong, but these companies have significant valuations. They're off, like you said, 10% over the month of June. Typically, the way these businesses have been run and what is taking investors perhaps some time to process is asset light, and they drove a tremendous amount of cash flow. Google having the most profitable, desirable business out there really in history, and now is pivoting away from having to raise debt and to spend a lot of money. And so as a result of that, it does seem like the market is going through kind of a recalibration of what these valuations should look like for these companies, or they're not getting as much capital as some of these other sexier names.
Important point you just made. The combined market cap of these 7 companies is over $21 trillion.
Yeah.
So not that 2.3 trillion is irrelevant, but it's about 10%.
Mm-hmm.
So yeah, let's not go running for the hills here. A big driver of all of this, though, Paul, has been the surge in profits of companies, right? Like, this is not one key way that I think people have pointed to as being different than the dot-com days is that it is not purely, at least, a surge in stocks that have very little in the way of earnings. And you see that when you go and look at the current price to earnings ratio on the S&P 500, for instance, compared to that period of time in the 2000s where it was substantially higher than where it is now. It's not to say that companies that don't have any earnings aren't also benefiting. Go take a look at SpaceX, right? Massive IPO on a company that's losing a boatload of money. But profits are sitting at 14.8% in the first quarter, according to FactSet. We will get a new read on profits for the second quarter starting a couple weeks from now. And that is the highest that they have ever been recorded since FactSet began looking at it back in 2009. It's also expected to grow further as the year goes on. I think if there's one piece of this that could be mispriced or misunderstood, it's the idea of these profits and where they are going to go over the next few years as the continued costs of building this stuff begin to mount. So we've talked about this a lot, but free cash flow versus profit margin, it largely comes down to just accounting differences of what counts and what doesn't. But companies that are buying a boatload of semiconductors and building data warehouses, for example, right now, are spending their free cash flow on those endeavors. They are not booking all of that expense as an expense on their P&L, meaning it may not in all cases be showing up on their profit margin. Why? Because it's an asset that they are purchasing. If you took an accounting course, what you know is that you get to depreciate an asset over time, and so therefore you don't get to realize that entirety of that expense right up front right away. And so the question that has been brought up by folks that are a lot more in tune and better at this and actually took accounting courses and analyze stocks have raised the question of, hey, when this depreciation starts to hit the balance sheets and starts to hit those profit lines, are you going to see these margins maintained, or is all of the spending that's been done just going to result in a whole bunch of realized expense without corresponding revenue to match it?
Right, because what you could have happen, like you mentioned, is these expenses being applied to the balance sheet year over year, but at the same time, demand could evolve to a point where it's not as robust as where it is today. Like we were talking about in an earlier segment, there is just insatiable demand for everything in the AI stack, and on a usage basis, companies are looking for ways to increase productivity and are throwing off sort of all the guardrails on spending and use for its employees to try and get a best understanding of how can this technology make our business better. Like we talked about before, eventually there is some constraint that needs to be applied when you're running a business on the cost side, and some scrutiny on what are we really getting from this. There was a quote in one of these pieces that I really liked that, to have Albert Einstein tutor your daughter in algebra would be fantastic, but there's other ways that you can do it a little more cheaply from a local math tutor. And that is kind of what has been applied to this idea of this AI usage, where they found in some cases that employees are using it to answer even the most basic questions, and it's driving up a lot of costs. Does that get reined in at some point in time?
Cost discipline. That's what I am looking for when I'm trying to detect signs that this is all something that's going to come crumbling down, is when do we see cost discipline on behalf of, frankly, those in the Mag 7? Right, that's all you need is one of them to say, this isn't looking like it's going to pay off the way that we thought it would. And that's the point where it starts to turn. And I hesitate to say that I see much in the way of cost discipline right now, which is why we are seemingly in AI mania at the moment. Let's take a quick break. When we return, another conversation about the Social Security program, the urgency to fix it, and how it probably won't get done anytime soon. That's next here on the Financial Exchange.
Missed a show? You can find them on our YouTube page. The show streams live every day, but every hour is archived, including all of our most newsworthy interviews. Go to YouTube and search for the Financial Exchange Radio Show.
Hi, this is Chuck from the Armstrong Advisory Group. Our new guide, Understanding RMDs, explains why required minimum distributions are about more than just withdrawing money from a retirement account. The rules can get complicated fast. An inherited IRA opens up an entirely new set of deadlines with rules to follow, and mistakes can be costly. The IRS can impose a penalty of up to 25% of the amount that should have been distributed. But there also may be opportunities to plan ahead. The guide covers strategies like qualified charitable distributions, reinvestment investing RMDs, and ways to help manage future tax exposure. To request your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate planning isn't just about writing a will. The right trust can help your family avoid probate, protect your home, reduce estate taxes, and even help shield assets from the cost of long-term care. That's why Cushing & Dolan created a new guide called Demystifying the Top 8 Estate Planning Trusts. Inside, you'll learn the difference between revocable and irrevocable trusts, why some trusts are designed to protect assets from a nursing home, and how certain trusts can keep your family's affairs private. The guide also explains some of the biggest mistakes families make, including creating trusts but never properly funding them. If you've been putting off estate planning, this guide is a great place to start. Call Cushing & Dolan today at 866-848-5699 to get your free copy. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Get real-time financial insight as news breaks. The Financial Exchange is live on X. Watch the show and follow us for the most up-to-date business news you need to know. This is the Financial Exchange.
Well, if you haven't heard, the Social Security Trust Fund is going to run out of money in approximately 5 to 6 years. End of 2032, I believe, is the most recent estimate from the Social Security Administration. And a lot of conjecture, and I know this isn't useful, but everybody likes to, commiserate about all the bad policy decisions that were made that led to this, when reality is that the biggest change and the reason that this is kind of going belly up is not due to a bunch of lawmakers robbing the trust fund. They do have the capability to borrow against it, but every borrowing that's been done was ultimately repaid into the trust fund. Largely, it's a demographics problem. We don't have enough children, and so therefore the pool of people who are receiving benefits has increased dramatically, while as those that are putting money into it has not grown, and so it's mostly that. But there have been other contributing factors. I mean, One, back when Congress started taxing and reforming things back in the 80s, the wage cap was structured at that time to capture 90% of all wages across the U.S. economy. So right now, as I think most people know, your earnings are taxed on Social Security up to $184,500. When that was started, that captured 90% of all wages. Today, it's like 83%. Why? Because that top income demo has grown quite a bit over the course of the last 40 years. There have been some policy decisions over the last few years that have also reduced how much taxes are going into the trust fund. The One Big Beautiful Bill Act just passed July of last year. What did that do? It provided a tax deduction to seniors over the age of 65. Well, if that happens, then less of your Social Security benefits are taxed and less money is going into the trust fund, further causing it to deplete sooner. There's just been no action, obviously, on changing any of the tax rates. It would have been a lot easier to change if you had done something in 2000 than where you are now. There's been all sorts of benefit expansion over the last decades, right? In terms of disability, in terms of changing, who can draw benefits. The Social Security Fairness Act.
Government pension offset,
Government pension offset and WEP wasn't a huge impact, but it was an impact. And then there have even been, periods of time where we stopped collecting or reduced the payroll tax, right? Back in 2011, the Obama administration cut the payroll tax by 2% to stimulate the economy post-Great Recession. And, these are all policy decisions that happened. And then you add on top of that severe demographic issues, and we have a serious problem here that nobody wants to deal with because nobody feels like they're to blame for causing it. But that's, again, in my opinion, interesting history, irrelevant.
Mm-hmm.
This is the reality we now face, and somebody's got to be brave enough to actually deal with it. And I see none of that real bravery out there in terms of people running for Congress.
Yeah, it was interesting. We talked about this on another show, and what echoed in my head is a comment that you had made to the effect of that both sides of the aisle, Republican or Democrat, haven't raised taxes in what feels like a very long time. And it's hard not to look at this problem and not see that would be one of the means that you would try to address this. And it's already been now sort of mentioned as a potential fix of, just getting rid of that income cap, the $184,500 on payroll tax, and just saying that you continue to pay upwards on any income that you earn. All of these fixes that are talked about, it's pretty simple in terms of what levers you need to pull. You increase taxes, you cut
the math is simple. The action is not.
That's the hard part, right? Is having to be the bad guy, in effect, because none of these solutions anyone's going to be thrilled with. No one's thrilled on the idea of paying more payroll tax into the Social Security system that is running low on money. Raising the retirement age just delays access to those people who are eager to collect, and having, higher taxes or taxing benefits in a different way. That's been mentioned too. Right now, 85% of most people's Social Security benefits are taxable. Changing that in any way, or 50% for some others, that would be frustrating as well.
What do you want to do? Piss off the masses? Piss off your largest donors? Pick your poison.
Yeah.
There's no good answers here. But the longer we wait, the more severe the changes are going to need to be.
A trust can do a lot more than simply pass assets to your family. Certain trusts may help keep your estate out of probate, protect assets for your children, and in some cases even help reduce estate tax liability. Cushing & Dolan has created a new guide called Demystifying the Top 8 Estate Planning Trusts. And in case you didn't notice, it's the last day of the month. It's your last chance to get this guide from Cushing & Dolan. The guide breaks down some of the most commonly used trusts in estate planning, including trusts designed to help families plan for long-term care, protect beneficiaries with special needs, and help keep life insurance proceeds outside of a taxable estate. You'll also learn why simply having a trust isn't enough, because if it isn't properly funded, it may not accomplish the goals you expect. To get your free copy, call Cushing & Dolan today at 866-848-5699. That's 866-848-5699. And remember, this is your last chance to get this guide from Cushing & Dolan because it's the end of the month. You can also request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Well, Paul, you just attended your first World Cup game, if I'm not mistaken, last night. Pretty fun take down at Boston Stadium.
Fantastic experience. I would rank it very high up there in terms of the best sporting experiences that I've had over my lifetime. Just a really fun time.
Well, I don't know if this is news about the Scots being crazy beer drinkers or all other Bostonians being wimps and not drinking much beer, but in terms of alcohol sales and beer sales in particular, Massachusetts bars and restaurants saw a 27.5% increase year over year, which is 9 percentage points greater than the next largest market increase of New York and New Jersey, who also saw their... Thank you. Total beer sales across Massachusetts grew 12% compared to last year, which is 4 times greater than the U.S. host markets on average. And I was trying to think through this, and I do think it's probably just the Scots were having a really good time in Boston is my only real... I can understand why we didn't grow beer sales as much as New York and New Jersey. That's a much larger metro area, right. And so, percentage-wise. But there are plenty other small markets that are hosting World Cup games that did not see their beer sales take off in the same way that they did here in Massachusetts. And, big beneficiaries here from what has been kind of a languishing industry, quite frankly, over the last several decades as more and more people turn to both beer and alcohol, generally alternatives from the traditional beer and wine.
Yeah, beer has really struggled tremendously. You look at our local, Sam Adams in terms of where they've tried to shift their business and focus more on seltzers. The beer industry in general has really languished. There's a bunch of different competitors out there, and it just hasn't been as much demand. Chuck and I made a mistake in thinking that the change on the bars from staying open to 2 a.m. to 3 a.m. wouldn't have an impact, because clearly it has.
Sure did. The weather is a contributing factor, too. It's been pretty nice. Quick break. A lot more to cover in the second hour of the Financial Exchange. Markets remain in positive territory. We will be right back.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
A trust can do a lot more than simply pass assets to your family. Certain trusts may help keep your estate out of probate, protect assets for your children, and in some cases, even help reduce estate tax liability. Cushing & Dolan has created a new guide called Demystifying the Top Estate Planning Trusts. It breaks down some of the most commonly used trusts in estate planning, including trusts designed to help families plan for long-term care, protect beneficiaries with special needs, and help keep life insurance proceeds outside of a taxable estate. You'll also learn why simply having a trust isn't enough, because if it isn't properly funded, it may not accomplish the goals you expect. To get your free copy, call Cushing & Dolan today at 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We've got a guide available this month on required minimum distributions. And, Mike, I want to talk about common mistakes that we see. Sure. Let's start first. People not understanding the difference between inherited and non-inherited IRAs.
Yeah, so if you've ever inherited an account that is retirement in nature, you've dealt with these complicated rules. And to make it more complicated, the rules have changed over the last several years. But suffice to say, unless you meet some very specific scenarios, in most cases, if you inherited an account from a non-spouse, then you're going to have 10 years to empty that account, pay pay any of the taxes that are due on it, and move along. But in addition, there are annual required minimum distributions, and it is very complicated.
What about a situation where someone tries to delay taking their RMD? What kind of problems can you run into there?
Well, one, if you delay your first year RMD, then you're going to have to take 2 in the same year, and that can really add to the tax burden. But more generally, if you just wait to deal with your future RMDs until you're 73 or 75 years old, you just have fewer options. It's going to bump up your income. You may end up paying higher taxes. You may end up paying higher Medicare premiums. Your Social Security could become more taxable. So it pays to plan early when it comes to RMDs.
Our guide this month is titled Understanding RMDs, and there are 2 different ways you can request it. The first, you can go to armstrongadvisory.com and request it there. The second, call 800-393-4001. That number again is 800-393-4001, or request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Welcome back to the Financial Exchange. It's a Tuesday here, the last day of June, the last day of the quarter on the Financial Exchange. We've got markets in positive territory. We had a JOLTS report out this morning, a job openings, labor turnover survey that indicated as of the end of May, about 7.6 million job openings, which was expected actually to decline compared to the previous month. It didn't. It stayed pretty steady for the month of May. This Thursday, we will be getting a full jobs report on the state of the labor market in the month of June, indicating to us that expectations are to indicate that we will see over 100,000 jobs created and the unemployment rate holding steady at 4.3%. Now that the Fed has very much shifted from a position of concern about the labor market to now a concern about inflation, I will be interested to see where this comes in, if it furthers that overall message from the Fed about a concern on inflation. We've been getting, as the show goes on, some releases from the U.S. Supreme Court on a number of different matters, none of which dramatically have any role in markets. One was a cap on political party donations after a rule was put into place, I think in the 80s or 90s, that got overthrown. And the other was, pardon me, just need to clear my throat there, a ruling that rejected the president's efforts to end birthright citizenship. That was also thrown out as part of this. So, but the biggest ruling that I can, take away from the last couple of days that does impact stuff that we cover here on the Financial Exchange would be yesterday's ruling on Fed Governor Lisa Cook. And having a little bit more time to digest all of that, what the Supreme Court seemed to very much affirm and draw a distinct line between is the White House's ability to remove officials on independent agencies, very much affirming the president's ability to do that with independent government agencies, and very much rejecting the president's ability to do that when it comes to the Federal Reserve, and drawing a very distinct line between the two. It does not mean that Lisa Cook won't eventually be removed. The point that they made is that without cause, which is, what the White House has been arguing over. But Lisa Cook hasn't been charged with a crime. Hasn't had a grand jury, subpoena or anything along those. There might have been a grand jury convened, but there was no charges brought until she has the ability to argue that case that the president cannot remove that person, whereas the court found he does not need that cause to remove heads of independent agencies such as the FTC. And that is a distinction that we assumed was the case, but needed clarification and now have it. And so, what this actually sets up, as Nick Timmeros from the Wall Street Journal reports, and we've mentioned Nick before, but so far, over the course of the last several Fed governors and administrations, he has been an unofficial mouthpiece of the Fed, seems to have very good connections into the Fed. We will see if that continues under Warsh, but it's certainly continued under Powell. And his point is that this really solidifies things for Kevin Warsh and may make his job a heck of a lot easier, with the knowledge that even if the president wants to whisper things in his ear, he has no real ability to inject policy or influence policy over the Federal Reserve, because he cannot go and remove sitting members of the Fed if he's displeased with them.
Yeah, this was a huge issue with Chairman Jerome Powell. Obviously, President Trump was very critical in the way that Jerome Powell went about his interest rate setting policy, demanding for lower rates for a substantial period of time during the end of Powell's tenure. But there was an attempt to, scrutinize Powell over his budget renovation for the Federal Reserve buildings and as a means to remove him. So to your point, it is really important. And for the global economy in general, this is significant. The U.S. economy and the Federal Reserve's independence is something that is a linchpin of the way U.S. markets run and interest rate policy is dictated. So to have that reinforced from an economic perspective with the results of this Supreme Court ruling is something that I think markets, largely will applaud, because it was something that was of great concern over the course of the last 6 or 12 months or so.
And to be clear, too, Kevin Warsh has been nominated to a term that will run through 2030. Mm-hmm. This isn't just a President Trump thing, right? Like, what the Supreme Court did was reaffirm that any sitting president does not have the ability to go and influence the Fed in that way due to the structure of how the Fed is funded and set up and, authorized under Congress. And so, what this also does is insulate Kevin Warsh from the next president, because one thing we are certain of is that President Trump will not be the president for another 3.5 years. It'll be somebody else in there that is guiding the country when Kevin Warsh continues to serve out his term. And so from multiple different perspectives here, I see what Timmeros is talking about when he mentions that, hey, Kevin Warsh, has a whole lot of weight lifted off his shoulders this morning after that ruling, where he just does not need to inject himself or comment on any of these questions about independence, because quite honestly, the Supreme Court just made it pretty clear.
Exactly.
So we will see. I don't expect Kevin Warsh to address these questions in any way like Powell had to. I also do just wonder, Jay Powell stated very publicly that he is going to remain on as a governor at the Federal Reserve for the remainder of his term, which is not the norm. Typically, when a chair ends his term, they also resign their governorship. He has stated publicly that, hey, he's not going to be willing to do that because of the threats to the Fed's independence that he sees. And this might be enough for him to be convinced that those threats don't exist anymore. I'm not sure, but if your main concern is, hey, there are substantial threats to the Fed's independence, and I want to continue to run out my term here to ensure that threat isn't followed through on, you just got a lot of that concern eliminated here with the Supreme Court ruling. And so we will see. If that were the case, then the president would be able to nominate another governor to the board, and we will see where all that goes.
Yeah, Powell's supposed to have that seat through 2028.
Correct.
If he were to continue on.
Yeah. Let's take a quick break. When we come back, we're going to be talking a little bit, we're going to be doing some trivia, and then we're going to be talking a little bit about all the surveys that we get on the vibes in the economy, because the vibes have been pardon my language, piss poor for a few years now. And are they legitimately this bad at this moment? Because it hasn't made a ton of sense to us when we compare those vibes to the fundamental numbers related to the economy. That's next here on the Financial Exchange.
Smart financial talk whenever you want. Find the Financial Exchange on YouTube. Hit that subscribe button and keep up to date on daily business news from New England and around the country. This is the Financial Exchange Radio Network. Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
Hi, this is Chuck from the Armstrong Advisory Group. Our new guide, Understanding RMDs, explains why required minimum distributions are about more than just withdrawing money from a retirement account. The rules can get complicated fast. An inherited IRA opens up an entirely new set of deadlines with rules to follow, and mistakes can be costly. The IRS can impose a penalty of up to 25% of the amount that should have been distributed. But there also may be opportunities to plan ahead. The guide covers strategies like qualified charitable distributions, reinvesting RMDs, and ways to help manage future tax exposure. To request your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Markets move fast. Follow the Financial Exchange live on X so you never miss a story. This is the Financial Exchange Radio Network.
right, time for trivia here on the Financial Exchange, and today is Michael Phelps' 41st birthday. Phelps is the Olympic record holder for most medals won and most gold medals won. So our trivia question today is simply, how many Olympic gold medals did Michael Phelps win? Once again, how many Olympic gold medals did Michael Phelps win? Be the fifth person today to text us at 617-362-1385 with the correct answer along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the fifth correct response to text us to the number 617-362-1385 with the correct answer along with the keyword trivia will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Paul, along with Susan Powers last week, I was co-hosting an event down in Quincy, Massachusetts, where we were talking about the subjects of Social Security and Medicare. And somebody asked a really good question, which was, we told them about the IRMA brackets, the income-related monthly adjustment amount, which is relevant once you're on Medicare because it determines how much you pay for your Medicare premiums. Suffice to say, the more income you have to report, the more you pay for your Medicare premiums. And she brought up that, hey, she's 73, her required minimum start this year, and is going to knock her into that higher bracket. What do I do? And my answer was a really dissatisfying answer, which is, frankly, once you are there, your options are extremely limited. Mm-hmm. Once you are of required minimum distribution age, you primarily have one option to avoid the taxes that are due on that, which is to donate a large portion of your required distribution to charity, which certainly helps with taxes, but does not help with your personal cash flow. And that is the unfortunate reality of required minimum distributions. It is nothing for, the first 15 years now of when you're eligible to start taking money out of a retirement account until the RMDs start. And then there's this cliff where, you have to take out a specific dollar amount every single year that grows over time. And if you want to be able to start planning for it, you kind of have to do so a decade ahead of time, because otherwise you face other tax concerns that are out there. Suffice to say, if you are closing in on RMD age, even if you are 10, 15 years away from required minimum distribution age, my point is that planning should start now for what you're going to do to deal with this. For some people, it is not an issue at all. For some people, it's, hey, my RMD is approximately what I was planning on spending anyway, and I'm in that same position. For others, you are required by the government to pull far more from your retirement account than you would ever plausibly spend in a year. There are all sorts of added complexities when it comes to beneficiaries who inherit these accounts down the road. So it is the last day of June. It is the last opportunity to get a copy of Armstrong Advisory Group's new guide on required minimum distributions, how to understand them, how to calculate them, what considerations to be making today so you are prepared for the future. Like I said, last day of the month, last opportunity to get this brand new guide for 2026 on understanding RMDs. Two ways to get it, as always. You can call us at 800-393-4001 to request your copy, or you can visit armstrongadvisory.com and request your copy there. But that number, once again, if you have questions, if you want to get your free copy, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Nate Silver took a look at some data and analyzed it. Silver, for those familiar, used to run 538. Does a lot of statistical analysis. I'm not sure he's got the perfect track record of predicting political outcomes when it comes to that data, but I do think that as, a data guy, he's pretty good at analyzing actual on-the-ground data and giving the results, then translating that to what's going to happen in the future, maybe not so much. But that's not what this is about. This is explaining data from recent history. And one of the things that we've been talking about at length is, hey, this University of Michigan sentiment survey in particular has turned extremely sour when it comes to how people are responding about how they feel about the economy. And to give you some context here, it's an index, so actually, determining what any of this means at any given point in time is kind of tough to do. But I'm going to pull the actual reading here and give you some comparison points for where we sit today. So May reading of this year came in at 44.8. That is lower than we got to in February 2009 when it got a reading of 56.3. It's also lower than where we were in May of 1980. Anybody that lived through May of 1980 may recall coming off of one of the worst decades of economic history with high inflation, high unemployment, high interest rates, just a really tough economy. It has been pretty bad now for quite some time and has even been worsening in 2026 as pretty objectively the economy's been improving, Paul, right?
Mm-hmm.
Like, yeah, there's been some inflation, but the unemployment rate has stabilized. The number of jobs created has stabilized. And what Nate points out with all of this is something that we have suspected, or two things that we have suspected. One, in 2024, they began migrating this survey from a phone-based survey where they would dial numbers and try and get people to answer, which I can see why they would have to migrate from that.
Challenging.
Nobody picks up their phones.
Yeah.
So, I understand why you needed to migrate away from that system, but it doesn't seem like they've been able to maintain the same sampling as they had previously. And Nate points out a few things that I couldn't confirm elsewhere. So I am kind of relying on his own analysis here. But one thing he pointed out is that the net share of Democrats that are responding to the survey compared to Republicans has surged since going on to a web-based survey.
Right.
This has been denied by University of Michigan, and they do acknowledge a slight, a slightly higher result of Democrats responding, but that's always been the case. And here Nate Silver is saying that the net share is substantially higher than prior to the phone-based survey, which I do think would explain a whole lot of what we're seeing right now. We see this, it's not just a Democrat thing, it is a Republican thing too. When your guy's not in the White House, you think the economy is terrible. When your person is in the White House, you think the economy is great, which is disingenuous, but the reality. The other piece that he points out is that even when you take out the demographic, voting shift here, people seem to be just responding more extremely, especially to the downside, on web-based surveys versus talking to somebody over the phone.
Yeah, it was something that they really thoroughly researched ahead of that shift going from phone to online to make sure that they kept the integrity of the data. But Nate Silver does point out that it does seem like when you test it over a longer period of time that you do see this correlation that people are willing to be more negative online. And for anyone who ever has read message boards or comments on articles, you can tend to see why people feel a little bit more comfortable behind a keyboard being somewhat more
terrible.
Terrible often. This is a survey, so it's not the same thing that we're talking about, but certainly there's perhaps a little bit more courage to be negative than you would over a phone call. And so these two factors help answer what all of us collectively here at the Financial Exchange have scratched our head on for a while now. It seems like we used to spend more time covering these sentiment surveys because in the past it was a better way to gauge how are people feeling about the economy. But as of lately, when I get this data, I am more apt to quickly dismiss it just because of some of the just misalignments that we've seen in terms of the data versus what is really going on the ground.
Yeah, I mean, to Paul's point, there has never been a period in history of this survey that has been marked by such a downward shift in consumer sentiment that hasn't been accompanied by a recession. The only other times that you've seen consumer sentiment crater like it has from the highs back in 2023, 2024 to where we are now, unaccompanied by a recession, was 2022. That was the only other time, and we didn't go to recession there. I understand why, high inflation, but 2020 recession, 2008 recession, 2000 recession, 1990, all of these other big drops in sentiment were accompanied by a recession. We didn't get one this time, and so we've kind of thrown this survey out, and until they find a way to be able to correct for these political biases, I don't really know what you do with this survey. Maybe you just compare it to the last couple of years and use it for that purpose, but that's not terribly helpful in my view. We've got to take a quick break. When we return, full market update is next with Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. As you age, the IRS stops asking you to save for retirement and starts insisting that you take money out. Those withdrawals are called required minimum distributions, and if you don't take enough, you could face a penalty of up to 25% of the amount you were supposed to withdraw. If you wait too long to take the first distribution, you could end up with 2 taxable withdrawals in the same year, which might push you into a higher tax bracket or increase your Medicare premiums. Our new guide, Understanding RMDs, covers this issue and others to help you prepare for this important retirement deadline. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. Now, do you lose control if you transfer your assets to an irrevocable trust in order to protect them from long-term care expenses?
Well, you know, that's great when you mention that irrevocable trust, but limit it to the kind of trust where you're protecting it from the cost of long-term care. Because as the guide says, there's 7 different kinds of trusts that we're trying to demystify. And there's also many kinds of irrevocable trusts out there, not just one type. So many people think there's just one type. But this particular type, where you're trying to protect it from the cost of long-term care expenses, the answer is no. You do not lose control over your assets. There's a whole spectrum of control with irrevocable trusts. And this one, you keep about 95% control. Like, you can live in your house, you can sell your house, you can buy another house, you can invest your money, you can manage your money, you can collect the income. Even the tax liability of these trusts are designed to be be at your own rate. In other words, they are grantor trusts. You don't even pay any higher income taxes when you have this irrevocable trust. So this kind of trust, folks, you keep control and you protect your assets from the cost of long-term care.
Call right now for your free copy of Cushing & Dolan's comprehensive guide titled Demystifying the Top 7 Estate Planning Trusts. It will help you determine what type of trust is right for you and your family. Call 866-848-5699. That's 866-848-5699. Or you can request it from LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, we've seen another little bit of a tech rally here so far this morning as the first half of 2026 comes to a close. Right now, the Dow is up about 0.25%, S&P 500 up 39 points, just over 0.5% higher. NASDAQ up 1.1% or 284 points. Russell 2000 is up about 0.25%. 10-year Treasury yield is up 3 basis points at 4.40%, and oil down about 1%. Trading right around $70 a barrel. Ahead of today's open, the S&P 500 jumped 14% this quarter, its best 3 months since the second quarter of 2020, while the tech-heavy NASDAQ rose 20% for the quarter and the Dow climbed 13%. Meanwhile, shares in drone maker AeroVironment jumping over 15% higher after the company blew past street estimates for its most recent quarter. After benefiting from U.S. plans to modernize the military and secure space, the company's CEO said during its earnings call that the company's growth opportunity has never been stronger. Elsewhere, after rising 13% yesterday, shares in crypto hoarding company Strategy are retreating about 8% today. The company said it plans to buy back stock and sell Bitcoin, among many moves in a bid to shore up confidence. And Nike will report earnings after today's closing bell. So far today, shares in Nike are down nearly 1%. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: how many Olympic gold medals did Michael Phelps win? That would be 23. And Donna from Enfield, Connecticut is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Donna. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Paul, you don't happen to be the descendant of a Singaporean billionaire, do you?
Unfortunately not.
Yeah, that's too bad. Go Cheng Lang, of 98 years old, deceased recently, and made 6 of his grandchildren billionaires, which is a nice place to be, which is not going to happen to the majority of us, unfortunately, so we need to make other plans. But it is true that more than $60 trillion of wealth just in the United States is going to pass from baby boomers to primarily millennials, some Gen Zers over the course of the next 2 decades, really. That's what we're probably looking at. Not to forget about you Gen Xers, but your wealth transfer will happen a little bit sooner, whereas millennials and Gen Zers will be a little bit longer out, and there's more money to go in that group. What is interesting to me is how these different generations, and it's always the case, every generation has different attitudes towards major institutions of different sorts, and I do see a pretty big difference between what millennials and Gen Zs care about, especially younger millennials and Gen Z cares about, compared to what older baby boomers, the silent generation, and even some Gen Xers care about when it comes to who they do business with, where they place their trust, etc., right? Like, one phenomenon that is definitely held true since the millennials: we don't work for the same company for a long time and don't really feel much loyalty to that employer.
Sure.
Not saying they should or shouldn't, but that seems to be the case. Average tenure at an employer is a lot shorter. Pension system's gone now, so who cares? You just get your 401k and, you move along. I don't know if I can point to specific thoughts that I've had or decisions that I've made here, but it also seems to me that millennials and Gen Zers care a lot less about a brand's physical presence in their neighborhood. Like,
Sure.
my parents want to be able to walk into a bank branch and do business with them, and I don't meet a lot of 30-year-olds that give a darn.
Definitely the case.
Like, the most important thing for me, for my banking or investment app, is that I have the ability to, my investing or banking relationship is that I have the ability to pull it open on an app on my phone.
Accessibility anywhere.
Do everything that I would
time.
want to do at any time of day and have it work seamlessly with other things that I prioritize.
Right.
That to me is way more important than having a physical location in my area. And so I do just wonder what this I suspect that the biggest banking companies in the world, the Merrill Lynch's, the Morgan Stanley's, are as aware of this as I am and are
there's been
reshaping
thousands
their entire
of seminars run about it in our industry.
Of course.
The number one topic to
The
BS
question is,
about.
will they be successful? For the time being, they need those physical locations to service those customers, while at the same time recognizing that their 30-year-old grandchildren don't seem to care.
Yeah, I've been surprised. Specific to one of the big financial institutions, J.P. Morgan Chase has been trying in the New England area to make more of a presence felt, where it's an area that's typically been dominated by Bank of America, just going back to the lineage of the history of that bank, Bank of Boston, all the mergers that they had. And in my town, for example, they've opened up a physical branch. And to your point, I can't recall the last time I walked into a physical branch of a bank. I'm sure all of us collectively here probably fall in the same boat where I never am really in bank offices often and actually prefer to avoid them if I can. I'd rather just do everything from my phone. And I actually get annoyed when you have to go in to do, some major movement to get an official check or anything like that. It's something that is a pain in the neck. But in terms of the brand recognition and name, I wonder if that still holds as much weight. I feel like the millennial generation would be more apt to give other financial institutions a consideration rather than going with the tried and trusted. Not to say that some of them won't fall into the same line that their parents do of using major financial institutions, but I have seen a little more flexibility to be with Robinhood, to be with Wealthfront, to be with some of these other upstart businesses.
Which, there's also been some downside there. I don't remember the name of the company, but do you remember that online platform that would basically reroute savings to different FDIC insured?
Acorn?
Was it Acorn?
That was one of them. Like,
did it go belly up?
Skimming off the top like extra cents? Is that the one you're referring to?
No, it was something else. So it allowed you to expand the FDIC coverage because this one online platform would route your deposits to different banks to get the best interest rate combined with additional FDIC coverage. And turned out the underlying software behind the platform collapsed and they couldn't track down where everyone's money was and they were locked out of their accounts for a prolonged period of time. And that was one of the few instances where I've seen that trust might have been a bit misplaced here on a really easy to use platform that didn't have anything underlying to it.
Silicon Valley Bank and wasn't a great experience either.
Right. But that was very much in your community and part of your everyday. So we will see where all of this goes. But my experience, for example, right? Let's say you talk to two different people, one who's 75 and one who is 35, and they each have $50,000 sitting in their checking account that they are saving for the down payment on a home. I will bring them to bankrate.com, for instance, to go look at, hey, where is the best interest rate that I can get from a savings account? The 35-year-old will say, great, give me that best rate. I don't care who the bank is, where they're from. So long as I've got my FDIC coverage, I don't care. I'll go online and set up the account. Thank you very much. The 75-year-old will browse that list until they find a bank they know personally and that they can go visit the branch on.
Definitely.
It's a huge shift in terms of how people think about their money.
In our meetings, just think about that as well. Typically, someone in that age demographic of 70 to 75 prefers the in-person, whereas the 35 to 40-year-old will do the remote.
Yep. Let's take a quick break. When we come back, a little bit of Stack Roulette is next on the Financial Exchange.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show.
Hi, this is Chuck from the Armstrong Advisory Group. Our new guide, Understanding RMDs, explains why required minimum distributions are about more than just withdrawing money from a retirement account. The rules can get complicated fast. An inherited IRA opens up an entirely new set of deadlines with rules to follow, and mistakes can be costly. The IRS can impose a penalty of up to 25% of the amount that should have been distributed. But there also may be opportunities to plan ahead. The guide covers strategies like qualified charitable distributions, reinvesting RMDs, and ways to help manage future tax exposure. To request your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. Hundreds of runners have already registered for this year's DAV 5K, and the event is on pace to sell out in record time. So head to dav5k.boston for all the information about how you can participate this November or make a donation to support our great American heroes. Your gifts help fund free rides to medical appointments for veterans, and the nation's first DAV-led housing initiative providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
So Synapse was the company that I was referring to before. Back in 2023, 2024, they kind of emerged as this banking as a service platform. So effectively other software platforms like Yotta, YOTTA, Mercury, Juno, they could launch, issue checking accounts, debit cards, and all of that stuff without becoming a bank themselves. They would effectively have this software sit behind the structure and deposit the funds at different banks, which would handle all of the FDIC coverage. Unfortunately, turned out that Synapse was not doing a great job of actually tracking and accounting for all of these deposits, and there were no allegations to this point, as far as I'm aware, of taking money, but rather just ledgers that were not completely clear on where the money was held. And what it led to was hundreds, if not thousands, of people being locked out of hundreds of millions of dollars of deposits on these platforms. The platforms, I believe, themselves have since collapsed. But even today, all of the funds have not been yet recovered. That was actually an update from the Consumer Financial Protection Bureau a year ago. I don't know the current status of things, but this was a very clear case of a bunch of people trusting a new and up-and-coming institution that kind of looked like a bank, felt like a bank, and turned out was not a bank, and really screwed up a whole bunch of deposits and locked people out of their money for a very prolonged period of time.
Not a good story.
No.
Not a good way to go.
Not a good way to go. What do you have for us for Stack Roulette, Paul?
Mike, want to talk a little bit about funflation. This is a piece here from the Wall Street Journal. When did having fun get so expensive this summer when funflation went wild? Coming from a guy who just spent a lot of money to go to a World Cup game yesterday. And it is a broader point. It is an experience that I had a tremendous time, and is something that I'll remember for a long period of time, just given the rarity of the event. But there's no two ways about it. These experiences are expensive. The World Cup, the Knicks versus Spurs NBA Finals was one where the tickets got to be an average of $4,100 a seat, just crazy numbers that you were seeing at Madison Square Garden, or maybe an average of $9,000 at Madison Square Garden, $4,100 in San Antonio. And it points to a broader trend that's occurred as well in the concert space. We've talked a lot about Live Nation and some of the practices that they've had as an industry. It does seem like, particularly on the concert side of things, I've experienced this once or twice where usually would be a little bit more open to going to a variety of shows, but now, just given the ticket prices, I'm more focused on going to an act that I really know a lot of their songs, know a lot of their material, and a little bit more hesitant to spend on someone just given the price for even a mid-tier artist if I'm not as familiar with all of their catalog of songs. Not all of them, but I would say a majority of them. And it's just an experience that live events have commanded a significant premium post-COVID. There's a tremendous amount of demand for them, and these businesses have been really taking advantage of that.
Yeah, I do agree that we are seeing that summer of that, right? The NBA Finals tickets were outrageously high even compared to last year. Why? Because the Knicks were in it. Mm-hmm. You're having the World Cup tickets. Well, World Cup comes about once every 4 years, and the first time it's been in the U.S. in decades. So I see all of this stuff. But to your point, you don't get to charge those prices unless there are a whole bunch of people willing to pay them.
Yeah.
And nobody's forcing anyone to go to the World Cup or to the NBA Finals. There's clearly enough money sloshing around out there that people are saying, YOLO, I'm going to spend my money on this because when am I ever going to do it again? And I agree. Like, I would love to see Live Nation split up and the fees that are charged there come down. But I also am not willing to look at that and say that that is the reason Taylor Swift tickets are $800. Like, no, the reason that Taylor Swift tickets are $800 is because a whole boatload of people have a whole boatload of money and are saying, what if I never get to see Taylor Swift again in my life? I'm going to go spend $1,000 a ticket to go see her at Gillette Stadium or the Scots play or any of this other stuff.
I fall in that camp with Radiohead next year, who's rumored to be coming to the U.S. and very well could be their final tour. And
yeah.
I have no business in affording this ticket, what it's going to cost, but considering that it's probably going to be the last time they go on tour, I'm like, I will pay whatever.
The scarcity,
yeah,
that was what came down to yesterday. I mean, I guess I was talking with a friend, and it seems like the U.S. may be in line to host more in a quicker fashion than I had anticipated, because the last one I believe was 94 or 98.
94, yeah.
Yeah, 94 when it was here. So I thought that was just the traditional cadence, that it would be another 30-plus years. But he was mentioning to me, and I'm not sure on this, that given all the pockets of money here, that it may be sooner that it comes back in this direction.
Yeah, I mean,
but I was kind of operating
know,
like this is my one chance for a significant period of time.
I don't know all the details of how FIFA operates, but assuming they make a portion of the ticket sales, this has gone off pretty darn well.
They do. They really command a significant margin. Like the ticket sales yesterday, a lot of the merch, and I believe the concessions.
I was going to say, God forbid they got a portion of the alcohol sales.
Yeah,
then, they're going to be flush with cash.
I think they are, yeah.
We had a texter, excuse me, out of the 508 saying, check out the prices for fish this summer at Fenway. In 2021, there was $225 a person. This year, $340 a person and $7,500 for a luxury box.
Yeah, wow.
That explains it. Yeah.
Again, especially with these very big bands that won't be playing forever, or Knicks playing in the NBA Finals or World Cup. I don't think there's a price limit that a lot of folks are willing or unwilling to pay on some of this stuff. The wild stuff to me, like I know you have to be at the home arena, but like the craziest thing about the NBA piece to me was the difference in prices for a game in, was it Houston?
San
Antonio versus New York. It was triple.
Yeah.
It was triple the price. It was like a fly to San Antonio.
Some Knicks fans
did
did
that.
Yeah.
Yeah, but even then, it didn't drive up the prices to be anywhere near as competitive as watching them play in New York City.
Another, I'm just kind of thinking of like big concerts like this year, and is one of your bucket list items the Sphere in Las Vegas?
Probably,
yeah, me too.
Like I recognize how ridiculous it's going to be to do it, but
yeah,
it has, from all accounts, been pretty. What do beers cost there? Like $40.
Oh, whatever.
Or something
Yeah,
like that?
Vegas prices. Yeah. But like Metallica's playing there in October. Get-in price $1,100.
Oh my God.
But I'm like, hey, how much longer is Metallica going to be playing? And oh, by the way, the Sphere is freaking amazing.
Yeah, I don't know. That's.
I'm not doing it.
It's not going to be on my list, but I do know that.
But that's an example.
They will sell it out. There is no
doubt.
Absolutely. They will sell it out. A bunch of old Gen Xers and baby boomers want to go watch Metallica at the in Vegas, and they've got the deep pockets to be able to do so.
That's the reassuring thing with all this AI conjectures. People still want the live events experience. You can clearly see
they still want to interact with humans.
Yeah, for now.
That's good. Markets remain in positive territory, and in fact, surging since we last updated. NASDAQ now up 1.23% as we close out the second quarter. S&P still up 0.2%, and the Dow up 1/5. We'll be back at it tomorrow. But it looks like we're going to have a pretty positive close to the second quarter. Have a great rest of your day, folks.